People think that the primary thing they should look at when they borrow money is an interest rate, but an interest rate is often a distraction. How many of you have ever gotten an invitation in your mortgage to refinance your house? And you get a lower payment and a lower interest rate. If you don't understand the money game, then you have to work on the board as one of the pieces. Now you have to start a whole new 30-year mortgage. In the first 10 years of your mortgage, most of the money you pay goes to interest. So even though you're paying a lower interest rate and get a lower payment, paying more in interest than if you had kept the higher interest rate with a higher payment. What would be better would be to get a home equity line of credit for the equity that you have and put that home equity line of credit in the first position if you can. And then every time you get paid, deposit your check into your mortgage balance and then use the checkbook that comes with your home equity line of credit to pay your bills. You'll pay off your mortgage probably in 3 to 7 years.
Okay, welcome back to another episode of Fact or Flop Friday, where I, Jackie P, your CFP, breaks down internet financial advice and separate the good from the bad. The only thing really here I wholeheartedly agree with is that if you do not know the money game, you are a piece on the board. Not that long ago, when interest rates were at record lows, there were tons of families that we worked with that refinanced their mortgages for the same amount of time that were left and still were saving money and putting money back in their pocket. Sometimes it's not the worst thing to refinance your mortgage and extend the loan a little bit if it reduces your mortgage payment in a significant amount. And the reason why that might be impactful to some people, maybe you don't have enough cash flow to fund your other goals. Maybe you don't have the cash flow to fund your retirement or pay down other bills or just even build up an emergency savings. I'm not saying you should refinance all the time, but it's not black and white. And you should really look at the numbers and how it impacts your financial plan. What I want you to think about is, does it make sense to rush to pay off your mortgage? Because if you pay off your mortgage in half the time, congratulations, you paid off your mortgage in 15 years, you paid all your extra money into that mortgage. What do you have to show for it besides being 15 years late on using that money to fund your other goals? Because I can guarantee you, if you pay off your mortgage, and you pay it off early, when you get to retirement and you don't have enough money in the bank, these banks are coming to help you. Yes, be responsible, pay your mortgage, but don't rush to pay off your mortgage because sometimes it doesn't really help you, especially if you have a low interest rate. I like the fact that he's trying to make you think a little bit deeper about mortgages and refinancing, but giving bad blanket blind advice is also just as harmful. So flop, and I'll see you next week.